Hey everyone, welcome back to Corporate Decoder, the place where we take these massive corporate documents and turn them into something you can actually understand. So buckle up because today we are deciphering Rollins Incorporated annual report for 2025, and let me tell you they have been busy. This is the big one, folks, the 10K report from Rollins Incorporated. It is their yearly deep dive into everything business, from how much money they made to all the risks they are facing. And trust me, there is a lot to unpack. Let's dive straight into the numbers, the financial tables. In 2025, Rollins brought in a whopping $3.76 billion in revenue. That is a pretty significant jump up from $3.38 billion in 2024 and $3.07 billion in 2023. This shows they are seriously growing the business. Now, expenses are always interesting. Their cost of services sold grew to $1.77 billion in 2025, up from $1.6 billion in 2024. A big chunk of that $1.16 billion went to employee expenses. This is typical for a service company and shows they are investing in their people to keep those essential services running. Sales, general, and administrative expenses also went up to $1.13 billion compared to $1.01 billion in 2024. This means they are spending more on marketing and running the company, but when you look at it as a percentage of revenue, it stayed pretty flat at around 30%, which is a good sign they are growing efficiently. Depreciation and amortization expense increased to $124 million. This is mostly due to acquisitions they made, particularly the SA Alla acquisition. It means they are investing in assets and services that will hopefully generate more income down the road. Overall, operating income for 2025 was $726 million, up from $657 million in 2024. This is a solid increase of over 10%. What does this mean for you? It means the core business is performing well and generating more profits. And then there is net income, the bottom line. Rollins reported $526 million in net income for 2025. That is up from $466 million in 2024. That extra profit is flowing directly to the company's earnings, and that is always good news for shareholders. Their earnings per S-share also saw a nice bump from 96 cents in 2024 to $1.09 in 2025. This is a clear indicator of their increasing profitability on a per S-share basis. They also talk about some non-GAAP metrics like adjusted operating income and adjusted net income. These are ways the company tries to show performance without certain one-time charges. Like acquisition-related expenses, their adjusted operating income was about $752 million and adjusted net income was $544 million. These figures are also up from the previous year and paint a picture of strong operational performance. One really important number is organic revenue growth. They reported 6.9% organic revenue growth in 2025. This means revenue grew without even counting the impact of all their acquisitions. That is a sign of a healthy business that is growing its existing operations. In fact, their residential pest control revenue alone increased by about 10%. Speaking of acquisitions, they completed 26 transactions in 2025, including a major one called Sailor Holdings LLC. This acquisition alone added about $54 million in revenue in just the portion of the year it was part of Rollins. They paid over $207 million for Sailor, and management believes it will add long-term value. This is part of their ongoing strategy to acquire strong, profitable businesses. You will also see big numbers for goodwill on their balance sheet. In 2025, goodwill grew to over $1.3 billion primarily from these acquisitions. Goodwill essentially represents the premium paid over the fair value of a company's net assets. It shows Rollins is willing to pay for companies that have strong brands and great customer relationships. Their intangible assets like customer contracts and trademarks also grew significantly. Customer contracts alone are valued at over $407 million. This reinforces that their value really comes from their customer relationships and the services they provide, which are often recurring. Now, it is not all sunshine and roses. The report has a whole section dedicated to risks, and boy are there many. They talk about facing intense competition with low barriers to entry, meaning new companies can pop up easily. They also mention challenges with labor shortages, the impact of climate change, and the potential for pest resistance to treatments. These are real risks that could affect their business. Cybersecurity is another big concern. They mentioned being targets of past attacks and the ongoing risk of future incidents. They have a new Chief Information Security Officer and are constantly evaluating their systems. This is super important because a data breach could severely damage their reputation and lead to costly legal battles. Rollins is also involved in legal proceedings from time to time. They currently have an inquiry from the Federal Trade Commission about their post-employment restrictive covenants. While they believe their practices are legal, the outcome is uncertain and could involve litigation. They also reached a settlement on environmental violations in California. Looking specifically at their management discussion and analysis, this section really highlights their strategic objectives, people-first customer loyalty, growth mindset, and operational efficiency. They have a strong focus on developing their employees and creating a positive customer experience, which they believe will help them grow faster than the market. Financially, they have been active in 2025. They issued $500 million in senior notes. This is debt they owe to others. They also have a $1 billion commercial paper program, which is a way to borrow money for short periods. Their total debt is manageable compared to their assets and earnings. A lot of company insiders like directors and officers are also trading shares according to these plans. This is a common practice and usually done to diversify their holdings or pay taxes. On the internal controls front, management and their independent auditor Deloitte and Touch LLP have both confirmed that Rollins has effective internal controls over financial reporting. This is crucial for investor confidence, ensuring that their financial statements are reliable. So what is the overall story here? Rollins is a growing company with strong revenue and profit increases year after year. They are aggressively pursuing acquisitions like Seller to expand their brands and customer base. Their core services are in demand and their recurring revenue model provides stability. However, they are not without risks. Intense competition, labor shortages, cybersecurity threats, and potential legal issues are things to keep an eye on. They seem to be managing these risks well with pretty solid financial controls and a clear strategy. Their investment in technology and people is a strength, and the continued growth in their core business coupled with strategic acquisitions suggests a positive direction. Overall, Rollins appears to be a financially sound company navigating a competitive landscape effectively. While the risks are present, the company's financial performance and strategic focus provide a solid foundation. Now, what is your take on Rollins' latest annual report? Do their numbers suggest continued growth, or are there hidden dangers? Let us know your thoughts in the comments below. If you found this breakdown helpful, please smash that like button and subscribe for more corporate deconstructions. And hey, check out our Discord community linked in the description to keep the conversation going. Thanks for watching, and until next time, keep decoding.